Hello, good people, and welcome back to this week's key market summary. I'm Talk Stocks with me, and today we are breaking down the highlights that rocked the market over the past week. The US markets were steered by the Federal Reserve Chair Jerome Powell's hawkish remarks during the Fed's meeting. Powell's comments signaled the potential for only two rate cuts in 2025, reflecting cautious optimism tempered by the Fed's commitment to keeping inflation under control. These remarks injected both volatility and speculation into the markets as investors recalibrated their expectations for the longer-term monetary policy outlook. Meanwhile, in Canada, the political landscape took a dramatic turn as Finance Minister Chrystia Freeland announced her resignation amidst ongoing turmoil within the Labour Party. This was further exacerbated by the disclosure from the current Minister of Housing, raising questions about stability within the federal government. This political uncertainty weighed on the Canadian equities, particularly sectors sensitive to fiscal policy and governance. Stay tuned as we delve into how this development impacted major financial instruments, including the US large cap stocks, the Nasdaq, the small cap stocks, the Canadian market, the Nigerian market, oil commodity, and Bitcoin. We're going to begin this week's video somehow differently from the past videos in this series. First, I would want to show you what I see on the charts for the VOO as a short-term trader for my swing positions. If you're a long-term investor who regularly dollar cost average into the index, my evaluation of the market is inconsequential to your strategy, and you are best served by continuing to DCA into your existing positions. Secondly, I will teach you how I arrive at my sentiment for the different markets using the VOO as an example. Let's get started straight away. Before I get into this video, I would like to give a quick disclaimer. I am not a financial advisor. The content of my video represents my personal opinions and is provided for informational, educational, and entertainment purposes only. This information is not intended to be legal, financial, or an investment advice. As always, conduct your own research and due diligence before making any financial decisions. Remember, it's your money. Make informed decisions that are right for you. I'll never ask you for money, nor will I provide my phone number or personal email address. If you encounter any suspicious accounts or messages claiming to be me, please report them immediately as fake or scam accounts. Let's begin the video by looking at the short-term sentiment on the US large cap stocks VOO. Now, what I want us to focus on is in the price action post 19th of September 2024. So what I'm going to do is I'm going to pan to the left so that we can pretend as if we have no price history before this date. And now this is what has happened with this assets post 18th of September 2024. And now what I've identified on this chart are the key regions. Remember, the yellow is the weekly key region. In this case is the weekly support, and the red horizontal line are the key regions that are identified on the daily time frame. Now this white line here is something that I identified as the neckline. So this neckline belongs to this chart pattern that I've identified on this asset, which is called the head and shoulders. So typically this is the left shoulder, this is the head, and this is the right shoulder. Just as we have the head and shoulders pattern, we have the inverse head and shoulders pattern. The head and shoulder pattern is actually recognized by traders as a bearish pattern on the chart, and typically what traders are looking for is the break of the neckline. And once the price action breaks the neckline, traders identify that the price can drop as much as, so I'm just going to show you, by the corresponding height of the headline. So what traders will do is they take this height here that measures the height, they make a clone of it, and then they go to the where this neckline is, and they drop that same tool. And so typically, if this neckline is to break, the price action might drop as much as to this region. But now what I want you to see is that while the right shoulder was being constructed, there was a gap in the price action, and you can see that this gap was preceded by a very bullish candle which is this green candle with very little wicks. And now if I activate the volume, you can see that you can see this high volume here. And so this kind of shows, buyers stepping into the market. And there must have been some news that might have contributed to this interest, to this sentiment by buyers entering the market. But what happened, or what came next, is a very bullish trajectory. And you see, by this gap up into the next trading range. And now what I'm able to identify again is that same head and shoulder setup being constructed, where we have the left shoulder, the head also established. But now, going into this week, two things can happen. We can get the right shoulder, or we can get another gap up. So if I come here, we can also get another gap. We can also see another gap where the price jumps into this trading range, or perhaps even above here. But there's a high probability that the price might move into this trading range, and that shows that indeed we are going to get a Santa rally in the short term. Now, so what we have to do is look at what is going to happen this week. Are we going to get the right shoulder constructed? And if the right shoulder is constructed, what we need to do again is to find the height of the head and then expect that we might see a similar drop in the short term. So if what we get this week is the right shoulder, then once this neckline is broken, because we still have to wait for the neckline to be broken and we get confirmation before we expect this drop in share price. So that's what we are looking for going into this coming week, and this will guide us if we're going to get our Christmas rally the next few days of the year, or we're going to see a continued bearish trajectory. Now, the second part of my video, I want to teach you how I arrive at my sentiments, both short-term and mid-term, for the different markets that I have interest in this weekly digest. So the first thing I'm going to do is to try and clear out my analysis. So let's get that done quickly, just to make the chart neater for our analysis. And what I'm going to do is I'm going to expand to the 5-year chart, and I'm going to fit my data to the screen, and I'm going to take out the volume. Just look at this huge jump in volume when the Fed chairman spoke this week. Wow, that's huge. And now, so to arrive at my market sentiment, I make use of the exponential moving average, the 20 EMA, and the directional moving index. So I'm going to add them to the chart straight away. In the moving averages video, I introduced you to this indicator, and I urge you to add it, into your favorite. So now I'm going to select it, and my interest is only the 20 EMA. So I'm going to go to the settings. I'm going to turn off other EMAs and only focus on the 20, which is the second one, and I'm going to paint it blue. I'm going to select blue as the color, and here you have the 20 EMA on the chart, which is on the weekly time frame. The other indicator I'm going to add is the directional movement index. I haven't spoken about that yet, but kindly please add that also, and it is written by, can't see that right now, but let's just add it. And now I'm going to also customize it. So what I'm going to do is also go to the settings pane. I like using white for the ADX and blue for the plus DI and red also for the minus DI. And now what we are looking for to identify the trend suggested in the price action is confirmation from the directional movement index. We are looking for ADX values above 20, and whether the plus DMI is above the minus DMI, or whether the minus DMI is above the plus DMI. Now, let's start from the short-term analysis. And for the short-term analysis, we use the daily time frame. And what I'm looking for is the interaction of the close price and the EMA, which is the 20 EMA. In this case, I can see that the close price is below the 20 EMA. This suggests a bearish trajectory. Vice versa, when the 20 EMA is below the close price, you have a bullish trajectory. Now, the analysis on the price action only suggests what the trajectory is. To confirm that trajectory, we'll use the directional movement index. And the first thing we are trying to see is the ADX, which is the white curve here, is it above 20? And yes, we can see it's above 20. So this tells us that there is a trend. Once the ADX is above 20, it means there is a trend. If it's below 20, there's no trend. It means either a trend is currently emerging. Now, we want to see if the plus DMI is below the minus DMI. In this case, the minus DMI is above the plus DMI, which is also bearish. And now, because the ADX is above 20, then we can say that yes, the bearish trajectory that was suggested by the price action has been confirmed by the directional movement index, because the ADX is above 20 and the minus DMI is above the plus DMI. Now, to infer the midterm outlook, I move to the weekly charts. And what I also do is look for the interaction between the close price and the 20 EMA and what is happening at the directional movement index data. So for the price action, I can see that the close price is above the 20 EMA. This suggests a bullish trajectory. Now, remember, this is suggestion. Now, to confirm that trajectory, I want to see if my ADX is above 20, which it is, which is 23. So that shows that there's a trend in place. And also my plus DMI is above my minus DMI. So this confirms that in the weekly time frame, which is my midterm outlook, that we have a bullish momentum. And this is the same step that I perform for each of the different financial instruments that I review during the weekly digest session. On the daily time frame, how is my price interacting with the EMA, the 20 EMA, and what am I also inferring from the directional movement index, meaning the plus DMI and the minus DMI and the ADX value. And so this is the end of today's micro class. In this micro class, I've been able to show you my short-term sentiment on the VOO, which is the US large caps stock. Are we going to get a Santa rally or not? And also how I arrive at my weekly summaries for the different financial assets that I have huge interest in. So let's get into the last section of today's video. Let's begin our weekly summary with the ETF VOO for US large cap stocks. The week to date performance stands at minus 1.90%. This is the second consecutive week of decline. Year to date, VO has delivered 25% compared to the previous year's 26.32%. From a short-term perspective, the daily time frame points to a bearish trajectory in the short term, while the midterm outlook on the weekly chart indicates a bullish trajectory. Moving on to the Nasdaq, represented by the ETF QQQ, it's recorded a minus 2.24% change for the week, which is also the second consecutive week of decay, bringing its year-to-date performance to plus 26.65%. Clearly, this underperforms last year's impressive annual return of 54.86%. The daily time frame points to a bearish trend in the short term, while the weekly chart indicates that an uptrend might be developing in the midterm. US small cap stocks, measured by the performance of VTWO, experienced a weekly decline of minus 4.51%. This is also the second consecutive week of decline. And year to date, VTWO has returned a performance of 11.04%, which is below the previous year overall gain of 17.08%. In the short term, the daily time frame is showing a bearish trend, and the midterm outlook on the weekly chart is neutral. For Canadian equities represented by the VCN ETF, this week saw a decline of performance of about minus 2.57%, which is also the second consecutive week of decay. Year to date, VCN has delivered a return of 18.93%, outperforming last year's overall gain of 12.29%. The short-term view on the daily time frame is bearish, while the midterm outlook on the weekly chart indicates a bullish trend. Switching to the Nigerian stocks tracked by SI, the week-to-date change stands at 1.19%, which is the second consecutive week of increase. Year to date, ASI has delivered a sizable performance of 32.91%, which still lags compared to last year's overall performance of 45.90. Short-term outlook on the daily chart points to a bullish trend, and the mid-term outlook on the weekly chart suggests that a trend might be developing, but right now there's no trend established on the weekly time frame. Furthermore, oil commodity tracked by USO recorded weekly decline of negative 1.450%. Year to date, oil prices have moved 9.68 performance, still outperforming last year's negative overall performance. The short-term outlook on the daily chart is neutral. Similarly, the mid-term outlook on the weekly chart is neutral. Finally, Bitcoin. We made a change here, and now we are tracking Bitcoin by the ETF GBTC. GBTC recorded a weekly change of negative 5.32%. Yet, year to date, GBTC has moved 120.88% compared to last year's overall 317.61%. The short-term outlook on the daily time frame is neutral, while the mid-term outlook on the weekly chart is bullish. As we wrap up today's market summary, the outlook across global markets shows a cautious tone. While most markets, including the US large caps, small caps, the Nasdaq, Bitcoin, and oil, are either bearish or neutral in the short term, the Nigerian market stands out with a more positive short-term outlook. Additionally, the mid-term prospects remain mixed across the different markets. This week's price action will be pivotal, offering insights into whether a Santa rally could materialize and providing clues about market directions heading into the new year. As always, international diversification and a keen eye on price movement are essential to navigating these uncertain times effectively. Thank you for tuning in. Don't forget to like, share, and subscribe for more weekly market updates. Let me know in the comments below what you think about this week's market performance. See you next week with another market summary. Until then, trade wisely and stay informed.